Okay, so in this video, I'm going to show you why NVIDIA right now, as of April 3rd, 2026, is still one of the most untapped, most attractive opportunities in the market, despite it being a $4.3 trillion company. It is still heavily under the radar. Yes, I know it sounds strange, but check this out. So we're working here with Stock MVP. This is the 2.0 version that's coming out in about 21 days. I'll talk about that in a second. But as you can see right here, I ran NVIDIA through our valuation model. And what I got is that the bear case for NVIDIA for the next 5 years gives us a price target of $290. The medium case gives us a target price of $870. And the average buy point for the 5 year ultra bull case is $2,500. So there's a lot of meat on the bone here. And I'm going to show you how I got to this valuation in a second. So let's scroll up here on Stock MVP. So these are my inputs, and I want to be absolutely transparent with how I got here, right? So right now, NVIDIA is growing at about 65% per year. I'll show you that as well here on Stock MVP. So we split the conservative case to 35%, which is almost half of the current growth rate. The middle ground at 50% growth, which is 15% below current growth rate. And the revenue growth on the optimistic model is only 5% higher than the current growth rate. Net profit margin right now for NVIDIA is 55%. We gave it a 60% optimistic and a 45% bear case. Free cash flow margin is currently 50%. We give it a 55% optimistic and a 40% bear case. PE at sale. Now, right now, the forward PE of NVIDIA is 22, 23. Basically, according to these, we're talking about a range between 25 and 45, which I think is reasonable, and 35 being the middle case. Price to free cash flow, again, 45 is the current, and it's ranging between 35 and 58 on the bull case. And the discount rates go from 12, 10, and 8. So basically, based on these inputs, these are the prices that we're getting for NVIDIA all the way to 1,300% of the next 5 years on the bull case, 400% the medium case, and 63% on the absolute bear case. Now, I want to show you the current valuation NVIDIA because these are our stock equity forecaster 5 year price targets in Stock MVP. But I do want to talk to you about the current DCF of NVIDIA. So, in order for us to run the current DCF of NVIDIA, we first have to find out what is the weighted average cost of capital, the discount rate we're going to apply to NVIDIA. So here, Stock MVP obviously does it for you automatically. You don't have to calculate it. You just put the inputs, but it also, it takes the data from whatever we have here on the platform. So this is automatically populated, right? So as you can see, it automatically populated total debt, interest expenses, the tax rates, the cost of debt, and then it inputs all of these numbers. And what you get here is the average where the average cost of capital, essentially the discount rate, is 11%. So the system gives you the discount rate for your DCF, which is super important. Now we scroll up and we input the data. So right here, by the way, you can see all the assumptions. So we're going to input 11% discount rate, terminal growth of 4%, which is a standard, revenue growth of 50%, which is 15% below the current growth rate, operating margin growth, depreciation amortization growth, capex growth, tax rate. The effective tax rate of NVIDIA is currently 15%. So we're going to apply that. Net working capital growth of 5%. And what we're going to get here, the DCF value is $305.53. So basically, 72.2% undervalued, assuming the revenue growth is going to decline by 15% as it stands today. And right here, again, for transparency, you can see the entire model on your screen. And as you can see, this DCF literally took me about 2 minutes to make. This is the beauty of this platform. This is why we built it. But we're just getting warmed up. I want to show you here the quick summary of NVIDIA so we can basically see what's going on. So NVIDIA over the past 3 months is actually down 6.5%, which is very tempting for a company of its quality. And it offers a little bit of a discount. How much of a discount? Well, it depends on how much you see the growth of NVIDIA in the future, but I'll show you the range for the past year. So if we go here to snapshot right here, I can actually show you the range. So this is the 52-week range of Nvidia. The lowest point Nvidia was trading for the past year is $86.62. The highest point it's been is $212.19. It's currently at 177, which is slightly above the middle ground. So it's not dirt cheap, and I'm not going to say it, but it is not in a bullish territory whatsoever. Especially if we go back to summary right here, I'll show you the craziest part about it all. So Nvidia basically is trading right now on the forward PE of 22 and a half. And that's one of the lowest forward PE ratios we have in tech. Above all else, this is probably one of the best in the business. It's a quasi monopoly. It's a massive company. The quality is insane. It's still trading below 23 forward PE. So these are the cards I pulled up here. It's fully customizable. You can pull up your own cards, and it's endless how much data you can pull here. But I basically pulled revenue growth 65%. At the same time, operating expenses are growing at 40%. So this is a very scalable business. Revenues are growing much faster than the operating expenses. The gross profit margin is insane, 71%. The operating margin is even more impressive at 60%, but somehow NVIDIA is maintaining that margin. Usually margins start off very high, and as more competition joins the market, margins tend to erode, but not in the case of NVIDIA. They're holding that 60%. Free cash flow is about 100 billion per year, growing 60% per year. Assets are four times higher than liabilities, which is insane. And if you look at the cash to total debt, they have six times more cash than debt, which is insane. Again, very, very, very impressive. Super excited about this company. Now, what I want to show you here is if we go back to the snapshot, every single score it has is actually summarized right here. So we have this thing right here where you see the total performance of the company currently scoring 88 of 100, almost perfect in every metric: growth, margins, liquidity, the balance sheet, the scalability, the institutional holding. Everything about this company is almost picture perfect. And if you look right here, analyst estimations currently at average of 280, it's trading at 177. I think that if you go to the bullish case, analysts are basically at 400. I'm way higher than that. So whatever you throw at this company, I think it's pretty obvious that the numbers are quite favorable. Now, if you look at the profitability of this company, it's pretty insane. Return on equity is 104.4%. Return on assets is 58%. It is one of the best companies in the business. And as you can see, the margins are not eroding at all. This is the margin evolution of NVIDIA for the past 5 years here in Stock MVP. Everything looks great about this company. Historically, it's all green, and it's probably one of the better companies we've analyzed here in Stock MVP. As far as solvency, of course, there's nothing to worry about this company. As you just seen, it has six times more cash than debt. Balance sheet is clean as a whistle. All the ratios are picture perfect. And of course, we can walk through the financials, independently and walk through every single one. This is the revenue and profitability trend of the company. As you can see, there's no erosion at all. This is the chart that basically shows you that the profit margin isn't eroding for Nvidia like a lot of people said it would. And you can look at the income statement right here. Everything is super duper clean, and it's growing at a faster pace than ever. Now, if we actually look through the insiders tab right here, it's held almost 70% by institutional shareholders. So 67.8% institutional shareholding. It's very good. It adds a lot of stability to the company. It's not a retail heavy stock, even though it sounds like there's a lot of retail investors, but it's mainly institutionally held. And if you look at the transactional activity right here, basically we have acquisitions versus disposition on the left side. So 48 trades by insiders of 71.9 million and 110 million sales. With this, I have to be honest with you, it's not the most accurate metric to judge what's actually going on, because with companies like Nvidia, there's a lot of employee stock options and restricted stock units and various grants, and there's tax issues involved. And like we've seen similar things with Palantir, when you have a lot of these grants triggering tax events for employees, there's forced sales, forced liquidations to pay taxes. So a lot of these dispositions are essentially just tax driven, but you can see them all right here. I think given the current status of the company, it has a lot more room to grow, and a lot of people will stay away from it because it's a $4 trillion company, and they will miss, the forest from the trees. I think even though it's still a huge company, you look at the business and the importance of GPUs for the data center business, And even though Google, for example, is going vertical with TPUs, still the vast majority of AI workloads over the next 10 years will be done via GPUs. And there's literally no other game in town except NVIDIA. And I think betting against it is pretty silly, especially given how much meat is on the bone and what's the margin of error here. So that's why we're super excited about it now. About the Stock MVP platform that you're looking at right here, the Stock MVP platform that I'm showing you is actually Stock MVP 2.0. This is the new version that we're going to release at the end of April, and it's going to come out. And if you're currently a Stock MVP member, don't worry about it. You're going to be migrated to this new platform automatically. You don't have to do nothing, and your subscription continues. However, for new subscribers that join after we launch Stock MVP 2.0, the prices from the old platform will double. We are going to double the prices once this launches because the platform took us a year to build, and we're going to charge more for it, obviously, because we need to bring back our investment, et cetera, et cetera. And I think the value is definitely there, even at the new price. I still think we're undercharging and over delivering. However, if you would like to have this and to use this platform and get the old price, you still have time. The next 500 people going to sign up for Stock MVP on the old platform will be grandfathered under the old price, which means if you get Stock MVP right now, stock-mvp.com, you download it right now, you sign up right now on the current platform, which looks a little bit different than this one. When we release this version at the end of April, you will pay the old price, half price, not the new price. So I'm really excited about this. Can't wait for you guys to be using this. If you would like to reserve the half off price, sign up now on the old platform and you'll be migrated automatically. And if you have any questions, comment below. Would love to give you some answers and insights. And we'll see you in the next video. We're going to be posting on this channel quite often right now. So see you in the next one. Peace.